Well, let's get right to our next guest for some investment strategy. He is Charles Gradante, managing principal at Hennessee Group, and he considers hedge funds to be a good indicator of market and investment sentiment. Charles says based on investment flows that there is money to be made in select areas. We'll talk to him about that now. Charles, thanks for joining us today.
Thank you, Monica.
Let's talk a little bit about these markets. How are hedge fund managers viewing the market right now?
Well, the second quarter earnings came in really nicely. 70% of the companies that reported beat estimates. The economy is looking good. Greenspan is basically saying that the economy is solid with contained inflation, and looking forward and the guidance is coming in real nice. So hedge funds are getting, I wouldn't say bullish, but they're getting more bullish. They think the second half of the year will be much better than the first half of the year. In fact, July, we expect hedge funds to be up between 1.5% to 2%, and that's with a 50% exposure to the equity market.
Let's talk about money flows a little bit and what you're seeing in terms of money flowing. I mean, are we still seeing a lot of money sitting on the sidelines at this point?
Yeah, there's generally about $4 trillion on the sideline, and there are money flows coming into hedge funds, but for the first half of the year, it was kind of sluggish. We think that'll pick up in the second half of the year. Emerging markets looks like an area that will see more money flow, long-short equity.
Well, we have the S&P 500. As I'm looking at a chart of the S&P up here now with the Dow and the NASDAQ, we've been sort of hovering near this 4-year high. With, money like that sitting on the sidelines, I guess, is there a lot of optimism we're going to break through that? Well,
yeah. I mean, if you're on a sideline right now, you feel like you're going to be missing the show. So a lot of hedge funds we monitor for our clients are feeling that the money flows into the equity market, particularly the mutual funds, should start picking up, which will help their stock picking on the long side.
What in terms of, I guess, where are people making money? That's the biggest issue, and where still areas to make money?
Well, the sectors that they've made money in and will for the next second half, or believe, is technology, healthcare, and energy. Of course, energy is a little bit less of a predictable situation. They're negative on financials because of the flat yield curve, and so that's an area that they're avoiding. And they're big on emerging markets and Australia. It looks good with the yuan being revalued up. Australia should benefit by that.
Talk to me a little bit more about how hedge funds are, I guess, investing, given that we've gotten this information now about the yuan.
Well, the revaluation up on the yuan will actually help basic materials and metals. So countries and companies that deal in that, Australia as a country, companies that deal in that will benefit. So hedge funds are investing in U.S. companies that export to China in those sectors, and countries that also, China's another one that will benefit by the yuan being revalued up.
Okay, we leave it there. We appreciate your time as always. Thanks so much, Charles. Charles Gradante, managing principal of